Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, November 10th, 2010. Well, folks, we have a little bit of a down day today. Not much. The Dow Jones Industrial Average is down about 40 points on the day. Nasdaq is flat on the day, and the S&P 500 is down about 2.25. Now, the real catalyst to today's initial down move, which was pretty steep, believe it or not, folks, as you can see, we came down from a gap, really an opening gap slightly lower, sold sharply, took out the double bottom from yesterday, and went even lower. But the markets turned on a dime as the dollar started to fall back down. And again, as the markets were falling, the dollar was going up. And as the markets began to rally back, the dollar had fallen back down. I'm going to put up the dollar chart right now, and you're going to see the exact opposite of this chart on the dollar chart. And again, it shows you the inverse relationship. Take a look. So again, early in the day, the dollar's going up, then the dollar's coming down. If we go back to the spiders chart, take a look, it's the exact opposite. Markets down, spiders up here. All right, and then back up. So again, that's really just showing you that the dollar is key in this market right now, continues to be that way. And again, you always want to keep that in mind in regards to which way this market is going. All right, if the dollar starts to fall, expect the markets to go up. That's exactly what Ben Bernanke and friends are trying to do. Keep the dollar as weak as possible. It will keep the markets inflated, keep the asset prices inflated like they are right now. All right, and again, the ultimate goal, as we've discussed in many previous videos, is to get the average American spending, because all of a sudden they look at their 401k and see that it's up nicely, 20, 25%, whatever it's up in the past couple months. Oh, now I can go buy that TV. Now I can go on that vacation, get the ball rolling, or get the merry-go turning again. All right, now again, on an intraday basis, let's discuss a few different things here. There were some good calls out today, and I want to go over them. And again, we'll just erase these lines so we keep it as clean as possible on the charts. Markets, again, kind of just bouncing around. You can see we just pulled back to the 20 moving average and then now bounced off that support line. But again, notice right here, as you came down, you got a small little bounce on this purple line, but it was just hit yesterday into the close. And remember, one of the key levels and one of the key things I talked to my premium members in the Research Center about and in the intraday stock chat is that when you come down to a major level, if you just hit it a candle or two ago, it oftentimes works as a second hit. You don't want to necessarily play the second hit, and that actually worked pretty well today. As you came down and you just hit this level yesterday into the close, look at the markets. They pretty much go right through that level and come down a little bit further. In addition, we confirmed below this pinkish purplish line right here. That means as soon as you confirm to the downside, you can short the first hit of the purple line on the way up. That's called the confirmation play, based on a proprietary technique developed by InTheMoneyStocks.com. And again, we teach all this stuff in the Research Center, folks, so you can just join up right now and get all that information. Education, swing trades, analysis on the markets, on oil, on gold, on the dollar, you name it, it's out there to be had. But in any case, notice how when you pop back to this purple line, right here you pierce it. I called out a short to the intraday stock chat, and look at the pullback that ensued. Beautiful little scalp short. Again, I took it right there, made a little bit of money, and again, many of the traders in the intraday stock chat traded for that and made some good money as well. Then after that, it goes back up, touches that line again, pulls back, and then we start to float higher. You get through that level. Remember, the more times you hit a key level, the more likely you get through it. You come all the way to the 200 moving average, pull back, little in spirit of bearish pattern here development, but you just drop down, hit that 20 moving average, and pop back up. To me, that's a failure of an in spirit of bear flag, and we should be looking for further upside towards the afternoon session, in my opinion, just based on that little failure of a bear flag. Do you guys see that? I want everyone to understand. Here's your downward move. Here's your bear flag. It dropped all the way into that 20. That's the support level, but look at how much it recovered. It recovered all the way to close green on that candle. That's a failure of the in spirit of bear flag. Therefore, look for a bullish or small bullish move, at least in the short run, just off of that failure. All right, again, you can see it kind of pausing right up here. We're down ticking a little bit now after that big pop, but nonetheless, I wouldn't be surprised if light volume and dollar pushing down could help this market get a little bit more of a bid in the afternoon session. Really, I think a flattish day is what I'm looking for after a nice little sell-off yesterday. Yesterday was a great sell-off. It was all because the dollar ripped higher. Dollar moved higher, markets moved lower. I mean, it's almost it's almost too simple in many ways how this market continues to work. All right. Now let's go over a couple of the charts. Obviously, I just talked about the dollar. You can see again the dollar is moving lower here. You can see the dollar really dropped, and that's exactly what happened. Isn't that interesting? You saw the dollar was right up here, and again, by the way, we just got the 30-year sales out, and that's why you had this fluctuation on the dollar. The dollar popped up here, and that's why the markets dropped, but then the dollar dropped all the way back down here, and that's why on that last candle we had that long tail on the bottom, because the markets were saved by this dropping dollar. It's actually amazing if you look in a micro sense on this candle right here. See this last candle, the long tail? Initially, it sold off because the dollar popped, and then all of a sudden the dollar fell all the way back down, and that's why the markets recovered that whole amount. I mean, it's totally tied to the dollar here, 100%, folks. There's really nothing else at play here. Sometimes you'll get POMO, which will manipulate the stock prices to get them up. A lot of the NASDAQ 100 stocks are manipulated by the Federal Reserve, stuff like that. But for the most part, you just want to focus on the dollar. All right, let's go over a couple other things. How is oil doing today? Oil is having a very solid day, up 80 cents on the USO. Let me get a quote on spot crude. Spot crude's up about $1 today at $87.70 right now. If we go to the daily chart, and here's a couple different things. These are some key levels. The movement up is towards this upper level here. That's probably the next level we're going to retest. I wouldn't be surprised to see oil continue to remain strong. Overall, the amount of money that's being pumped into the system is going to have an inflationary impact on oil. Oil prices and gas itself will go higher. And then also you can easily look for, in terms of the economic rebound, to also, if that starts to play out more and more, that'll push oil up, at least in the short run as well. First stumbling block, then that could change. But for now, it looks like it's intact. And even with the dollar basically flattish, again, pulling off the highs, you still see oil up pretty nicely on the day. Gold is also up today very nicely. Although gold, believe it or not, yesterday, even after spot gold closed. Remember, gold and oil close in the early afternoon session or mid-afternoon session. Markets continue to trade, which means the GLD continued to trade. GLD got punished all the way down here. Gold's recovered a lot of that drop when the spot gold was closed yesterday as well today. And again, you have it basically negating that, which tells us that gold itself is, give or take, right around that that level, that give or take that level of flat line, in taking into account what it dropped there as well. All right. Couple other things to go over. First of all, LVS, Las Vegas Sands, one of the crown jewels here of the Research Center and the Intraday Stock Chat. We called out this topping tail last Friday. I alerted everyone to it on Friday. A beautiful topping tail. We took a little bit of a short there on this trade at $52, right above $52. The stock again dropped tremendously. It's still down $2.30. Again, beautiful drop. I took my money and ran off half of the position at $48.90 on the LVS. So again, a very nice gain there. Basically $3 and change gain on the first half. I'm going to hold the second half with a break-even stop. No hurt done there. If it pops a little bit more, maybe I'll even pick up that second half as a short. But another good winning trade there. And again, as we get some more volatility in this market, the more and more swing trades and more day trades will be had. So you got to be on point. That's why if you're not a member of the Research Center, it's wise to join now as we get more and more of this volatility. The market seems to be trying to figure out, does it want to go higher? Does it want to go lower? How much more manipulation can the Federal Reserve do? And all these different factors are really all playing into it and seeing exactly, where we end up going. All right, so again, nice trade on LVS. Congrats to all those in the Research Center for taking that and, again, profiting on the short pullback here. Beautiful topping tail. Understand the topping tail. Understand how extended it was off the 20 moving average. These are all signals that you want to pay attention to. All right, what else do we have? STEM, obviously, that was a great winner that I called out a couple days ago at 90 cents. Added to the Pro Trader. Continues to move up here. Basically, a move from a 90 cents to $1.09 today. Talking about 20% gain there on that STEM. And again, that was a play off ASTM. Look at this move on ASTM, up over 100% in the last 2 weeks. So again, just understanding the sympathy side of the trade and then going into STEM off of that sympathy. Beautifully done as well there. All right, in addition, pulled Free C's, FREE, off the Pro Trader watch list today. Alerted that, I think, in the 475 to area. It hit 508 today. Another profitable trade from the Pro Trader right there. And again, that's a small cap shipping stock. The shipping stocks are still cheap, but they are starting to run. We caught them beautifully. I also alerted on OCNF as well on there. And again, some good profits there as well. So continuing to just see some good ideas here. Finding the key stocks that haven't run yet, and then looking for the plays to short that are extremely extended. That's the way you have to manage this market right now. That's the profitable way at InTheMoneyStocks.com. So again, I'll leave you with this, folks. Let's make some more money this week. Again, if you take a look at Apple into the end of the day, Apple's up $1.20 here as we get into the early afternoon session. I will continue to put out more trades in the Research Center, more hot charts and alerts, more pro traders. Join to see the nightly videos where we're going to cover everything that you could possibly want on everything from the markets to oil, gold, and the dollar. And again, I'll see you all there tonight when I do my nightly video of 30 to 40 minutes in length. Take care, folks. Have a great rest of the day.